So hello students, good evening to all of you. Students, this is the second session on the assessment amendments in relation to the assessment. In the last lecture, we have already done the introduction of this 147 and certain other aspect about what is the nature of the amendment that has taken place as far as section 147 is concerned. So that particular part, students, I have already discussed with all of you. Now today, students, right now, I am going to take you through 147, so the remaining part of 147, so that you already have the clarity exactly what the amendment is all about. Students, in the last lecture, just quickly doing a recap of the relevant amendments that we have discussed, the relevant amendments particular part, students. In the last session that we have discussed, students, if you remember, now for giving the notice, students, for giving the notice under section 148, I told you last time also, students, for giving the notice under section 148, do we have a time limit? And the answer is yes, we do have a time limit, students. And that, as you know, in this particular context, herein, sorry, there's no time limit to give the notice. Primarily, there's a time limit which has to be specified by the assessing officer in the notice of section 148. In the notice of section 148, the assessing officer will have to specify the time limit as to by when the ROI has to be filed by the SSC. As to by when the ROI has to be filed by the SSC in response to the notice of section 148. And students, what is the time limit in this case? Exactly. So the time limit, students, in this particular case happens to be 3 months. Now 3 months from the, not from the date, but from the end of the month. Be careful. Huh? These are the important part, because this is where your MCQ questions would be based upon. Okay, so wherever the amendments are there, specifically on the time limit side, you need to be remembering those time limits carefully. Other time limits you may not remember, doesn't matter. But if there is an amendment and the amendment is directing towards time limit, then those time limits should be known to you. So this 3 month, students, is to be considered not from the date of notice, but from the end of the month. End of the month of what? End of the month of issue of notice of 148 or service of notice of 148. Indeed, students, it is the issue of notice of 148 from the end of that month. From the end of that month up to 3 months, the return should be filed by the SSC. That time limit should be mentioned by the AO in the notice of section 148. Now, I have told you already, students, in the last lecture. What was that, students? That if the SSC happens to file the return of income within that 3 months period, then absolutely no issues on that. If the SSC happens to file the return within that 3 months period, students. Now, do we have any issue on that? Answer is no. So, if the SSC happens to file the return within the 3 months period, absolutely it is fine. But if at all he does not file the return within that 3 months period, students, in that particular case, you are inviting the assessing officer to pursue the best judgment assessment. And that is one of the part that I have already told you in this context. Now, students, as you know, the information, the notice, students, which the assessing officer gives. There are two proceedings I told you, students, in the last lecture, in the first lecture, that technically there are two proceedings that takes place in the context of the assessment of 147. Okay, so what is the two proceedings? First is the proceedings of section 148A, in which the assessing officer will have to get himself satisfied that indeed the income of the SSC has escaped the assessment. Now, as far as the satisfaction is concerned, what the AO will do? AO will give a notice under 148A. In that notice of 148A, he will demand from the SSC the show me the cause why I should not start or pursue the proceedings under 147 by giving you a notice of 148. So the assessing officer here is demanding from the assessee that please show me the cause why I should not go ahead and do 147 by giving to you a notice of 148. Tell me the cause why I should not do that. And in that notice of 148A, we have also discussed that it should be accompanied with what? The information. Remember that information should be accompanied with that notice of 148A. So the notice and the information should go together. 148A notice plus the information should go together to the SSC. Now what is this information, students? The information which has resulted a doubt in the mind of the AO that the income of the SSC has escaped assessment. Now that information, students, if you see over here in this context, information, what is information? The information with the AO suggests that the income chargeable to tax has escaped the assessment. It means, it is not include, it means that the sixth list item is exhaustive. The question to all of you therefore is, beyond the six, any other information or any other source will that do for the AO to provide the notice of 148A or notice of 148? To that the answer is no. So therefore, students, be careful. If at all the AO wants to pursue the assessment of 147, for that first and foremost he need to give the notice of 148A. In that 148A, it should be accompanied with the information in the possession of the AO. That information, students, should be within that sixth list, which is this list, students. So one of the six items should be the information with the AO who shall be giving that information along with the notice of section 148A to whom? To the SSC. Is that point clear to all of you? You can say, sir, anything beyond the sixth item? Answer is no. Why? Because information means, it means exhaustive item. Let's have a look. So point number one, any information in the case of the SSC for the relevant AY in accordance with the risks management strategy formulated by the board from time to time. So therefore, this is nothing but, students, these are automatically the information pops up. Now these are already software based. These information, students, are generally software based already. They provide the triggers because you know the return is filed online. Once the return is filed online, the data in the return is captured appropriately at different servers. And in that, you can find that they already have done the programming. Like for example, I can tell you, like traveling expenses vis-a-vis the sales, they have a particular percentage. That much percentage, if up to that much percentage of travel expenses with respect to the sales, that much is accepted. But if at all, in this case, the travel expenditure vis-a-vis the sales is much higher as compared to what is programmed in that server, in that particular case, students, it will create a trigger to the assessing officer that, look boss, this is the area wherein there is something that the assessee has done it. Either the sales has been suppressed or the traveling expenditure may have been inflated. One of the two would have happened is the kind of thing or the information which the AO gets it. The AO, students, gets it from whom? Primarily from that risks management strategy, technically speaking, from the software which is already programmed. Point number two, students, any audit objection to the effect that the assessment in the case of the SSC for the relevant AY has not been made in accordance with the provision of the Act. Any audit objection to the effect that the assessment in the case of the SSC for the relevant AY has not been made in accordance with the provision of this act. Like for example, students, there is an objection to the effect that the assessment in the case of the SSC for the relevant year has not been made. For example, a simple example I can give it to you. A particular student's loan has been taken by the SSC, and that loan, on that the interest expenditure is incurred. That interest expenditure, students, the SSC has claimed a full deduction. The interest expenditure, students, the SSC has claimed a full deduction. Okay. However, there is an audit objection in the audit report where the auditor has qualified the report stating that the loan which the SSC company has taken, that has been diverted to its directors, to the chairman, for their personal purpose. That qualification is reported by the auditor. Now, in that situation, students, if such is the observation given in the audit report, or may I say, such is the objection given in the audit report by the auditor, then in that case, one can easily deduce that this interest deduction claimed by the SSC is incorrect. Why it is incorrect? Because an interest deduction is allowed only when the loan has been taken and it is applied for the purpose of business and profession. Loan has been taken and it is applied for the purpose of business and profession. Is that point clear to all of you, students? In this context, that exactly the point, students. So this is what it is, students, in this regard. Okay. Now coming to the third point, students. Any information received under an agreement referred to in section 90 or 90A. So obviously this is which information, do you know what information they're talking about it? In DTAA, students, you may have referred this term, PIEA. In international taxation, this term is very popular. Tax Exchange Information Agreement. Now, this Tax Exchange Information Agreement, as you may be aware of it, that it is there with many countries. It is there with many of the countries, students. Tax Exchange Information Agreement. So, when you have got such kind of an agreement which is there with the other particular country, what happens? They keep on feeding to you lot of information that, look boss, there are these people who are resident of India and they have got certain assets which they have purchased just now in, say, that foreign country. Now those information becomes very critical, students. Why it becomes so critical? Because that information the department will check out that for that part of the asset, did the SSC had enough income which he has disclosed in his ROI? Whereas in the ROI showing 5 lakhs of income and some foreign assets he has purchased of, say, worth of, say, 5 crores. Now that is also critical and sensitive information now in the possession of the AO. Now the AO wants to investigate further. He would want to know that a person disclosing only a 5 lakhs of income and going ahead and purchasing a foreign asset worth of rupees 5 crore, that is the information. Now this information, students, he is received from whom? From that foreign country. Why? How that foreign country has given this information to the AO? The foreign country has given this information to the AO because of the Tax Exchange Information Agreement. Because of the Tax Exchange Information Agreement. Next part. Any information made available to the AO while under the scheme notified in respect of faceless collection of information. Faceless collection, students. Various mode has been notified. So 135A. Any information which requires action in consequence of order of tribunal or a court. Example. Example is that, like say in the case of another SSC, Mr. A, they have so the Supreme Court has held that expenditure Z has to be disallowed. Please pay attention on this part. The Supreme Court, in the case of another SSC whose name is Mr. A, in that the Supreme Court has held that expenditure Z has to be disallowed. Now, this expenditure Z has been allowed so far by the AO in respect of all the SSC falling in his jurisdiction. This expenditure Z has been allowed by this AO in respect of all the SSC who were falling in his jurisdiction. Now, Supreme Court judgment has come, and the judgment says what? Expenditure Z has to be disallowed. Now, as you know, the Supreme Court judgment is binding. If it is binding in this case, whether that also can be considered as an information. Now, whether that can also be considered as the information for the purpose of initiating the proceedings of section 147 by issuing notice of 148A, answer is yes. Why? Because this information becomes critical, that the Supreme Court has held that expenditure Z has to be disallowed, and I, the assessing officer, has allowed expenditure Z to all my particular SSCs who are in my jurisdiction. So based on that judgment, I am going to not disallow, for which I am going to disallow the expenditure Z to all these SSCs. For purpose of disallowing, I am going to issue what? The notice of 148A, and that is the information. Which is the information? The information of the judgment of the court. The information of the judgment of the court. That is point number 5. And the last one, students, be careful. Point number 6. Any information emanating means arising from a survey conducted under section 133A. Other than, this is an important one, other than conducted under 133(2)A for verifying TDS and TCS. If you see that chapter of 133A, section 133A, the TDS and TCS information to verify whether the TDS and TCS compliance has been made or not, that the survey can be undertaken, and for that there is this section 133A/2A in the bracket 2A. So be careful. If you did the survey under 133A and the purpose or the objective of the survey was to verify the TDS and TCS compliance, then that cannot be considered as the information on the basis of which you are going to initiate 147. That is not an information. Just be very careful. These are your MCQ based questions which the ICAI targets. However, you will say that other than the survey for TDS and TCS, if for any other matter that the survey has been undertaken, and during the course of the survey certain important items was being received, certain important items, students, was being received during the course of the survey, then whether in that particular case, students, whether in that particular case those particular items which was being retrieved during the course of the survey, whether those can be considered as an information for the purpose of which the 147 proceedings could it be initiated? And the answer is yes. And the answer is yes, students. I hope that all of you are clear with this one. Every one of you. So this is what it is, students, in this regard. Fine. So that is how it has to be considered. Now be careful. One important amendment I am telling you, students. If you remember, students, up till last particular attempt, means before the amendment, even 132 was being referred over here. That based on the search under 132 or requisition under 132A, that whatever is being gathered during the course of search or requisition, as the case may be, that also can be considered as an information. That can also be considered as an information. But now, primarily, as I told you, the block assessment, students, or the assessment in consequence of search, for that they have made a separate chapter altogether. So that has not been merged with 147. It is completely a separate chapter altogether. And because it is a completely a separate chapter, block assessment is not no longer is made applicable in this case. Therefore, students, they have removed those 132, 132A reference from 147 section completely. So you will not find any reference of 132 and 132A in the provision starting from 147, 148, 148A, 149, 150, 151, 152, and last 153. No reference is made in this context. So just be very careful on that. Time limit. So that so these are the 6 points which only will constitute information. Other than this 6 points, say through any other means the AO is getting those information, then those is not sufficient enough. They are not sufficient enough to pursue or to initiate the proceedings under section 147. Be very clear on that particular part. Fine, students. Now coming to this particular part, which is point number 4. Time limit for issue of notice under 148 and 148A. Now, students, as far as 140, just have a look over here. First, students, just have a look to this one. The first notice, students, as you know, goes for 148A. In yesterday's class, I already have taught you this particular proposition. So you know that the first notice, students, happens in this context of 148A. And therefore, by when the 148A notice has to be sent or has to be issued, in this context, sent or issued is one thing. Okay. So by when the 148A notice has to be issued? So if the relevant assessment year for which the income chargeable to tax has escaped assessment, say for example is the relevant AY for which the income chargeable to tax, I'll just write like this, huh? Income chargeable to tax has escaped assessment. Can you see this one? So the relevant assessment year for which the income chargeable to tax has escaped assessment is AY 21-22. Say in that context AY 21-22. The question therefore is, by when the time limit for issuing the notice of 148A. So time limit to issue, students. Be careful, the words are important, huh? Not service. Don't mess up your answer by, if it is a descriptive question, you have to be very careful. If it is an MCQ based question, it is fine. But when it comes to a descriptive based question, you cannot substitute the word issue with service and all. So these kind of imposing the important points will always help. So time limit for issue, students, in this case 148A, which I have mentioned to all of you, is in this context. What is the time limit, students? If 3 years have elapsed from the end of the relevant year, so they are saying that no notice can be issued. Students, be careful, huh? When they start with the word no notice can be issued, so this no notice is a negative provision. Students, I'll ask you one question, because many students are not even aware of this finer things of law. That is unfortunate, be that as it may. Many a times what happens, students, is that people write the provision like this, and you tell me whether they are one and the same. I'll give you two sentence of law. Sentence number 1. Let me give you the example of section 37(1) itself, very popular section of 37(1). 37(1) is general deduction, isn't it? So in 37(1), they say that expenditure which is not herein. What is the condition for the claim of deduction of 37(1)? What is the condition, students, for the claim of deduction under section 37(1)? First condition, the expenditure should not be covered under section 32-36. The expenditure is not personal in nature. The expenditure is not capital in nature. And lastly, the expenditure is for the purpose of business and profession. These are the 4 primary tests. There are other explanation. Explanation also put forth additional conditions. So these are the primary 4 points. Expenditure is not covered under 30 to 36. Expenditure is not for personal purpose. Expenditure is not capital in nature. And the expenditure is wholly and exclusively for the purpose of business and profession. 4 items. If you see, the 4th item only is a positive. It is for the purpose of business and profession. So point number 4 is a positive point. And the first 3 points, if you see A, B, and C, they are all negative point. What is the negative point? Expenditure is not covered in 30 to 36. Expenditure is not personal in nature. Expenditure is not capital in nature. See, one thing is there, students. Whenever provision is negative provision, students, it implies that the provision has to be interpreted in the most strict sense. Those provisions, students, will have to be interpreted in the most strict sense, students. You cannot write, now be careful, now very casually students write in their examination that under section 37(1) the deduction will be allowed if the expenditure is revenue in nature. Answer is wrong. 37(1) never tells you that I will allow the deduction if the expenditure is revenue in nature. What it only tells that the expenditure should not be capital in nature. You just need to satisfy that particular part. Once it is established that the expenditure is not capital in nature, I don't know. I don't know whether I can refer that expenditure to be as revenue in nature. I don't know that. But I only know that what I have to prove for the purpose of claiming a deduction in section 37 is that the expenditure should not be the expenditure should not be capital in nature. That is the limited point that I need to prove it. That is all. And that's the reason why, students, over here also, if you see, here the provision is done in a negative sense. They are saying that no notice to show cause under 148 shall be issued for the relevant AY if 3 years has been elapsed from the end of the relevant AY. They could have also written in a simple manner, isn't it, students? This particular point they could have easily written in a simplistic manner. And what is it, simplistic manner? They could have instead should have written like this, that the notice under 148A shall be issued for the relevant AY within 3 years from the end of the relevant AY. Within 3 years from the end of the relevant AY. That they have not written. If a layman, if they are hearing this, for them it is one and the same. When I say no notice can be given after 3 years from the end of the relevant AY, after 3 years from the end of the relevant AY, that versus notice has to be given within 3 years from the end of the relevant AY, for a layman it appears to be the same, that no notice has to be given after 3 years or notice has to be given within 3 years. It appears one and the same. It actually might appear for a layman one and the same, but be careful, students, they are different. And why they are different? The moment I use this word, no notice can be sent after 3 years from the end of the relevant AY. This is a negative sentence. Students, this is a negative sentence. And if it is a negative sentence, its interpretations has to be done in the most strict manner. Its interpretation, students, has to be done in the most strict manner, which implies that even a day extra, if I might have taken, that becomes invalid. No excuse will be tolerated. Even if one single extra day, if I have taken to give that notice, it will become an invalid notice. This is a kind of impact of a negative provision. A negative provision has to be interpreted in the most strict manner. Is that clear to all of you, students? So coming on this one, students, no notice to show cause under 148A shall be issued for the relevant AY if 3 years have elapsed from the end of the relevant AY unless the case falls under clause number B. unless the case falls under point number B. Now students, if you see very carefully over here in this context, 3 years would be what? In my case study, students. So 3 years in this case. AY 21-22 plus 3 years. 31st March 2025. 31st March 2025. So this is point number A in this context. 31st March 2025. Unless the case falls under point number B. Now what is this point number B, students? In this context, more than if so this is more than 3 years, but not more than 5 years. So over here, more than 5 years, more than 3 years. Okay. Notice under section 148A, but it is less than, students, 5 years. This is the point. So more than 3 years, you can still issue the notice, but not more than 5 years, or may I say up to 5 years. Up to 5 years, students, that will become how much? 31st March 2027 in our case study. The extra 2 years, na? But for this, students, what is the condition? If as per the information with the AO, the amount to or is likely to what, students, is 50 lakhs or more. So this is possible if students, AO as per the information, students, what he has got this, students, that the income chargeable to tax, all in abbreviation writing, students, because already I have discussed this thing with you above. Income chargeable to tax has escaped assessment is how much, students? More than or equal to 50 lakhs. So only then, students, this is possible. So more than 3 years, the notice can be given, but up to 5 years if the AO, based on the information that the income chargeable to tax has escaped assessment, is more than or equal to rupees 50 lakhs. Is more than or equal to rupees 50 lakh, students, and that exactly is the point. So what is the upper time limit, students? 31st March 2027. So this is again a big amendment, because you know that before this thing, the amendment was 10 years. What was the position of law before the amendment? It was for 10 years. Now it is maximum time to issue the notice is 5 years from the end of the relevant AY, provided the condition is satisfied. What is the condition? Condition is known. I hope that all of you are clear with this one. Now, friends, this is for the notice of 148A. As I told you, students, there are 2 notices which are being given for that 147. There are 2 proceedings which are initiated. In my first class, I have already discussed this point. So, proceeding number 1 is 148A for getting himself satisfied, and proceeding number 2 is actually starting the proceedings of 147, for which the notice of 148 is to be given. Now, students, tell me one thing. Here, what they are now, this is what the first we have discussed about the show cause notice under section 148A. So no notice to show cause under 148A shall be issued for the relevant AY. That we have discussed. If you see over here now, point number 1, no notice under 148 shall be issued for the relevant AY. For the relevant AY, if what means the notice for that would be given if what, if 3 years and 3 months have elapsed from the end of the relevant AY, unless the case falls in B. Now you will find that for the second notice, which is 148, you will find there is an extension of 3 months in both the time limit. that we have discussed for 148A. So whereas for 148A, which is the first notice that you give, the time limit is 3 years or 5 years. Here, for the second notice, which is the notice of 148, the time limit to give that notice is 3 years plus 3 months or 5 years plus 3 months. Now, one may argue that, sir, why that extra 3 months? Why they are doing it? Because they also understand that 3 months may have consumed. Three may have consumed for what? For this getting himself satisfied under 148A. One thing you should appreciate, students. There is no 148A, students, 148A, how much time that the AO will have to take under 148A proceedings. That is to say, how much time that he should take to get himself satisfied that whether the case is fit for 147 or whether the case is not fit for 147, how much time that he should take under 148A, that is not expressly provided in this provision of 147. They have not expressly provided, but it is implied by reading this particular point of time limit to issue the notice of 148. We find that the time limit to issue the notice of 148, there is extra 3 months that is given. When it is compared with the time limit of 148A, we find that there is an extra 3 months given for the time limit to issue the notice under 148. So therefore, that extra 3 months, students, is essentially meant for, that is the point, students, for completing your proceedings of 148A, which is the first notice, so that you get yourself satisfied in the 3 months time. So it is actually implied that the first notice that you give, 148A, for which you want to do the inquiry and get yourself satisfied whether or not this is the fit case to be pursued, for whether or not this is the fit case to pursue the proceedings of 147, that time limit, students, is implied from this particular provision of time limit of 148 notice. And how much is the time limit for 148A? Is 3 months. Is 3 months. So this 3 months is the extra time that you have got. This is essentially, students, for the 3 months, students. I'm just putting an asterisk. The extra 3 months for issuing the notice of section 148 is essentially to complete the proceedings under section 148A. To complete the proceedings under section 148A. Now, students, please understand. Here, the notice of 148, students, be careful here, this is a very important part. The notice of 148, students, what is the time limit? 3 years and 3 months. And what about the extended time limit? So this is the extended time limit. What is the extended time limit to issue the notice? Is 5 years plus 3 months. 5 years plus 3 months. Do you all agree? Now this 5 years plus 3 months extended time limit is given to you on what basis? The AO can issue the notice under 148 up to 5 years plus 3 months. On what basis? On what basis this extended time limit is given, students? the assessing officer has in his possession, what he has got in his possession, students, mark this one: books of accounts or other documents. Books of accounts or other documents. That is point number one. Or point number two, evidence. Evidence which is related to asset or expenditure or transaction or entries or entry, students. So evidence. So first is the assessing officer has in his possession books of accounts or other documents, or he has in his possession, students, evidence. Now this evidence should be either related to, so this is point number two. The evidence is either related to asset or expenditure or transaction or entries. So A, B, C and D, which show that the income chargeable to tax which has escaped assessment is how much? 50 lakhs or more. Now this is, students, the scope is much wider. The AO either through the books of accounts which is in his possession, like during the course of scrutiny, or might be survey. In survey also, students, please tell me whether in the course of survey whether the AO can he impound the books of accounts. Please tell me quickly whether in the case of survey can he impound the books of accounts under 133A. Answer is yes. So therefore, is the books of accounts in the possession of the SSC? Answer is yes. So now the books of accounts is in possession of the AO. Now on the basis of that, can he issue a notice under 148 up to a period of 5 years plus 3 months from the end of the relevant AY? Answer is yes. Only condition is that the income chargeable to tax should have escaped the assessment, which should be minimum rupees 50 lakhs. I hope that the case study is now, you can do the interlinking. I'm doing the interlinking of what we studied earlier, 133A, and then connecting it with this. This is how the examination questions are asked. And I'm telling you, students, no students have read like this. They have done the amendments, but they have not studied like this. And this is what primarily the ICI also is aware of it, that the students cannot do interlinking. They have read the amendment without interlinking. So I hope that you all are now aware of how the things will be pitched to you in your examination. So in his possession of books of accounts or other documents or evidence related to asset or expenditure or transactions or entries which show that the income chargeable. Now please understand over here. Did they said, students, evidence related to students, asset, expenditure, transaction or entries which show that the income chargeable to tax. Now students, please be careful, students, over here. Now I'm telling you certain important part. Survey has been done in your premises. Okay, in your premises, students, the books of accounts has been impounded. Certain documents have been impounded. Okay, books of accounts and the documents has been impounded, and in those books certain entries has been found which pertains to me, unfortunately. Maybe some hawala entry or some bogus entries. Now you, through that entry, you are accommodating me. So it's like you are trying to accommodate me through those entries. I, being your well-wisher, I would have told that, look boss, I want an entry of 50 lakhs to show to do a black and white. So therefore, you said that fine, I'll give you a cash loan. I'll give you a loan, or might be some sort of a loan transaction, so that the amount comes in my books, and therefore through that amount primarily I am doing some activity of a business. And what I do, I pay off you in cash. Obviously, these are the hawala particular entries. That I want an accommodate. I want some entries from you, so that I can do some of my business transaction in check. So there is, through your books of accounts, there is one entry which has been found in my this thing. Pay attention how this is going to go on now, students. Now what the AO finds, the AO first do the inquiry on that person who has given me the loan. Now through that inquiry, he came to know that the explanation is not to the satisfaction. Now he knows that the explanation is not to satisfaction, and I, who is the beneficiary, I have taken the entry. Na? What the AO will do? They will launch on me section 68. Section 68, students. Congratulations, Darshan. RTS, congratulations. So what the AO will do, students? Section 68 is going to introduce section 68. How? That is how he is going to deal with it. Now, does he has got that particular level of students evidence? Do we have got that? Now, what he will do? The entries. He is going to now do the interlinking of the entries. In that entry, students, please understand, they have not written anywhere that the books of account should be of the SSC or the evidence. The evidence should be related to. It is related to. They are not using the word that this should be of. It is related. So is that entry related to me? Is that entry, students, related to me? Answer is yes. So if the evidence which I have got, it is related to an entry, and through that entry it shows that the income chargeable to tax would be likely to have escaped of minimum rupees 50 lakhs. So can that assessing officer, if he has a jurisdiction on me, can he initiate the proceedings by issuing a notice of 148A? Answer is yes, he can. So he will give me a show cause notice under 148A, and by giving a show cause notice to me under 148A, he will ask me, students, one very important question. What is that important question? You have an entry, I found an entry in Mr. Y's book in respect of a cash loan, a loan. You have to tell me the three things. 68 inquiry, yeah? Students, see how he is doing 68 inquiry now. Through 68, he is entering to 147. Through 147, he is doing 68. And then 68, he is going to, the tax rate, students, it is going to be very high. So this is how, students, the scope has enlarged. That they are doing primarily an assessment or scrutiny of, say, Mr. X. In that scrutiny, some entry is related to me. And if the entry is related to me, and on me, they want to initiate section 68 through that entry, can they do it? Answer is yes. They can definitely do it. By giving first a show cause notice under 148A, asking me that there is one entry that has happened in, let's say, 2 or 3 years back. We need to understand those entry. Three things we need to understand. Person from whom you have taken that loan, the identity of the person, the capacity of that person who has given you the loan, and the genuineness of the transaction. This is the question that they ask under section 68. The identity, the capacity, and the genuineness. And if you cannot satisfy us in all these 3 points, then that loan that you have taken will become a deemed income, students. And once it becomes a deemed income under section 68, then you know the consequence of tax rate. What would be the dangerous tax rate, students? That happens. So this is one of the trickiest particular part, students. That's the reason why when you write, see, if it is an MCQ based question, I think that you are sorted out. You don't have to write like this. If it is a descriptive based question, you have to be very careful as to what you write, because these were not the language which was there earlier. These are some new language which has been introduced. So normal time limit, students, for 148, what is the normal time limit? 3 years plus 3 months from the end of the relevant AY. Extended time limit, students, extended time limit is what? 5 years plus 3 months from the end of the relevant AY, provided either 1 or 2. What is that 1 or 2? That either the AO has in his possession what? Point number 1, has in his possession what? Point number 1, books of accounts or documents. Or point number 2, evidence. AO has in his possession, point number 2, evidence. Evidence related to what? Asset, expenditure, transaction, or entries which show what, friends? Which show that the income chargeable to tax may have escaped the assessment of an amount which is minimum rupees 50 lakhs. Which is minimum rupees 50 lakhs, students. And that is the point of the amendment, that when you write, students, you write it very carefully. So this is how you do the split. I hope that split is known to you. AO has in his possession point number 1 or point number 2. What is in his possession? Either the books of accounts or documents, which is point number 1, or what is in his possession, point number 2, which is evidence related to assets, etc., etc., which shows that the amount which has escaped is 50 lakhs or more. I hope that you will be in a position to write this thing, because this is where the amendment was. So gone are the days of 10 years, students. Now it is 5 years. But tomorrow when I do the block assessment with you, students, tomorrow also in the evening, students, at the same time, I will just tell you what is the time limit and how the comparative part of it. So students, this is what we are into it in this context. Rest of it, students, we have already done it. Information, we've discussed it. Okay, now students, see this one. Point number 5, please delete it. Point number 5, students, please delete point number 5. You will say, why we have to delete? No, this is the old provision relevant up to point number 5 is the old provisions. Why I am deleting it? Old provision. See, students, for May 25, November 25 attempt, students, they will not ask you the old provision. Old provision, students, you are aware, 3 years and 10 years. So old provision, students, they will not ask you. Okay. Obviously, those who are doing practice and all, for them, they need to know, because the client may be receiving the notice for that old period. That is fine. But here, for as a students, you don't burden yourself to read this point number 5. Entire point number 5, I told you, it is an old provision. So don't try to mix up the two. You just discard completely this point number 5. And this goes till, till page number so point number 5, it is a massive here. Till page number, students, please make a note of it. Till page 91. Till page number 91. Fine, students. Now, other than that, there is no amendments. What is that? Page 150. 150, old provision, just like old provision. What is the, no amendments are there. Whatever were the amendments, we have already discussed. Other than that, now you will not find any amendments. So this point number 6 that you do, here it is what, friends? That no time limit. This is for no time limit case. This is for no time limit cases. Means we have just now seen that 3 years and 5 years are the time limits to issue the notice. But here 150 says that there is no time limit to issue the notice. There is no time limit to issue the notice. 150 says what? There is no time limit to issue the notice if the reason why you are issuing the notice, in a simple word, I am just telling you, because this is not that important. So in a simple word, if the reason why you are issuing the notice is because that you are just giving the effect of the court order. So for that purpose, if you have to initiate 147, then please go ahead and initiate 147, and don't look that, sir, whether 3 years or 5 years has it been elapsed. Those the criteria need not be looked upon at all. So you are not supposed to look upon to those particular criteria. Is that point clear to all of you, students? Every one of you? So this is one thing which has been there. So therefore I told you no time limit. In which cases? The case where the reopening has been done to give the effect of the court order. So there is no time limit to issue the notice. Okay. This part 151 is, students, delete it. Delete it, students. 151A. Okay. Rest of it, students, other provisions. Again, no amendment in this particular context. 152 students. Income escaping assessment to be charged to tax at the rate applicable for the respective years. At the rate applicable to whom? To the respective year students. Obviously, the 3 years before you have initiated for the AY 21-22 in my example, in my original example. So you will apply the tax rate of which AY? Obviously the AY of 21-22 only in this context. AY of 21-22 only students in this context. So therefore that is the provision. This is a theory question, student. Theory question. In fact, I remember still once only they have asked somewhere in November 2000, I'm talking about 25 years back. Because our senior, when I was in fact just joined the articleship around that time, our senior, they got this examination question and they could not attempt it. I still remember those days. So they could not attempt it at all. And obviously, we also never knew what was that provision unless we read that provision. This was a provision. The question that they have asked was, under what circumstances that the proceedings of 147 can be dropped? Under what circumstances that the proceeding under 147 can be dropped? I will give you in a very simple word, students. If you read the theory, just read it once with theory if you can understand. I'll give you an example also. But if you can just read this one out once, I'll give you an example also. Quickly, students. Fine, students. So I'll give you an example so that you all are aware of it as to what exactly this particular point is all about. So students, over here, supposingly students, let's take a very simple example so that all of you can appreciate this amendment part. I'll give you a very simple example, students. Please pay attention. The example in this case is that, like presumptive taxation, there is an assessee who is in the presumptive taxation and he is offering say 8%, 8% of gross receipt as his presumptive income. Now 8% of gross receipt, students, say his gross receipt was around 60 lakhs. 8% is a relevant rate as per the act. But this person, instead of offering 8% on 60 lakhs, he offered say 12% on 60 lakhs. Instead of offering 8%, which is a provision of law, he has offered 12% of 60 lakhs. Now 12% of 60 lakhs would mean 7.2 lakhs. 7.2 lakhs, students. So he has offered 7.2 lakhs as his income in the ROI. Okay. Now subsequently, when the scrutiny was going on, it was being found that instead of 60 lakhs, his gross receipt, students, was 80 lakhs. Instead of 60 lakhs, his gross receipt was 80 lakhs. 80. So the assessing officer initiated 147 by giving all these notices and all. And the proceeding was initiated. Therefore, the question is whether this proceedings which was being initiated by the AO, can that be dropped? Can that be dropped, students? And the answer is yes. this is a section 152 subsection 2. Why? Because here the SSC can establish, or the SSC can prove, that what he was assessed earlier was on the amount which was on a higher side. Because please understand, if he would have gone as per the law on and taking the gross receipt as 80 lakhs, how much he should have offered? 80 lakhs, 8%. 80 lakhs, 8% is 6.4 lakhs. It is 6.4 lakhs. But in reality, how much he has offered? Originally, in reality, how much he has offered? 7.2 lakhs. So even if you take the gross receipt from 60 to 80 lakhs, the SSC can rightly say that he is already been assessed for an amount which is already on a higher side, which I have proved it in my example. And on that note, students, the proceeding of 147 will be dropped. I hope that all of you are clear with this one. So these are about for the old provision. These are the saving clauses for the old provision, irrelevant. So you all, you just need to skip this particular part. I hope that all of you are clear with this one. Students, this is a time limit that you should always bear it in mind. Time limit. I think the time limit, students, all of you are aware. At least time limit of regular assessment of 143 and 144, you should be aware of it. And they have given you many AYs. Just focus on AY. This is for regular assessment. For regular assessment, the time limit to pass the order. Of 143 or 144. From AY 22 to on onwards, 12 months from the end of the AY in which the income is assessable. Plus, if it is a transfer pricing case, students, what will happen? So if it is a transfer pricing case, students, in this particular context, whether you have to add another 12 months, if it is a transfer pricing case, students, whether you have to add another 12 months, and the answer is yes. Can you see this? In this context, this is 155, 153, 4. So if it is a transfer pricing case, so that 12 months, students, that 12 months will become 24 months. Means 12 months extra in everything that you do. 12 months extra, students, in everything that you all do. I hope that all of you are clear with this one now. Why, students? So this is the point, students, that you should always bear it in mind. This is for this assessment. Now what about for the 153.2? That is for 147 assessment. Is there any amendment? Do we have any amendment, students, on that particular part? So that the answer is no, students. So that the answer is, students, no. There is no amendment as such. So the same thing is there. You just have to focus on this one, students. Only what I'm highlighting. Forget the upper one. Just focus on this one. Where notice under 148 is served on or after 1st April 2019. On or after 1st April 2019. Then 12 months from the end of the financial year in which the notice was served. Which notice? 148 notice. So the end of the financial year in which the notice of 148 was served, plus 12 months. End of that financial year plus 12 months. And if it's a transfer pricing case, 24 months. So at least one good part is that 12 months and 12 months is the same thing. Only difference is that for regular assessment it is 12 months from the end of the relevant AY. Whereas this is the 12 months which is from the end of the financial year in which the notice was served. That is it, students. There is no other amendments. Just focus on this particular amendment that we've discussed all. And now the next class, that is tomorrow, same 8:30, 8:15 I suppose. No, 8:30, students. We'll be meeting for block assessment. Okay, so block assessment, students, I'm going to take across tomorrow's session. That is what, students. See you then tomorrow for the block assessment. Take care.